Hello everyone. Today I'll talk about the recent export ban on onions in India. Here is the background. India is the world's biggest exporter of onions, a staple in South Asian cooking. Countries such as Bangladesh, Nepal, Malaysia, and Sri Lanka rely on Indian shipments. According to a survey a few years back, India's onion consumption per capita in a year is 13.5, whereas the world stands at an average of 10.8. Over a period of time, our production has also increased. In last 9 years, our supply has increased by 61%. According to reports, India projected to produce 24,000 million tons in FY20. These are the top 10 centers with highest increase in onion prices. And these are the top 10 centers with highest decrease in onion prices. Now let us understand the sequence of events. In June 2019, India withdrew 10% export incentives on onions after prices started to rise due to dwindling supplies from last year's harvest and a delay in planting of the summer-sown crop. In September 2019, India has imposed $850 per ton minimum export price on onion shipments to calm local prices and to curb its shipments and help bring down spiraling domestic prices. The minimum export price is the rate at which no exports are allowed. In March 2020, the rabi or winter harvest has been substantially higher and prices have stabilized. Onion prices in most retail markets were hovering around 30 to 40 rupees per kg. Government allowed the export of onions from 15th March. In June 2020, Union Cabinet approved amendment to the Essential Commodities Act 1955. Stock limit will be imposed under very exceptional circumstances like national calamities, famine with surge in prices. Recently, in September 2020, government bans onion exports as prices treble in a month after excessive rainfall hit crops in southern states. Farmers' organizations were quick to call out the double standard on part of the government. Government approved bill amendment in June 2020 and after 3 months it banned exports again. This is a contradictory move. According to the data released by the government, the rural CPI in August stands at 6.67% as against 6.76% in July. Among the states, highest CPA was witnessed in Assam, where it stood at 9.52% in August. The lowest CPI was witnessed in Delhi, where it stood at 3.58% in August. August 20, CPI is at 6.69%, a tad bit lesser than 6.73% of the last month. RBI's inflation target is 4% and the upper limit is 6%, but consistently, as you can see in the chart, our CPI is trending about 6% mark. The Consumer Food Price Index, which is a measure of food price inflation for August, was 9.05 as against 9.27 of last month. Further, the data indicated that rural CFPI stands at 9.11% in August as compared to 9.47% in July. And the urban stood at 8.82% in August as against 8.99% in July. So the answer to the big question can be found in the exceptionally heavy rains which lashed the country in August. Those rains have led to a near complete washout of the almost ready onion crop in Karnataka, which was to hit markets early in September. Along with this, the rains have also wreaked havoc on the stored onions in Madhya Pradesh, Gujarat, and parts of Maharashtra. At present, it is only the onion growers in Maharashtra who have stored up the produce which they harvested in March-April. The supply disruption is likely to continue till the new crop in Maharashtra hits the market in early November. So this is the first reason. The second reason is, while domestic onion prices remain stable, It is a spike in external demand for onions which seems to have triggered the ban on export of onions. It is the demand from countries like Bangladesh, Nepal, Malaysia, and Sri Lanka. India exported $198 million of onions in April-June and $440 million in the entire 2019-20. 44% of total exports happened in just one quarter, April to June. To give priority to Indian consumers, maybe government has banned exports. And the third reason, last year the government imposed countrywide stock limits to bring down prices of onions that had soared ahead of state elections in Maharashtra and Haryana. This year's upcoming state election in Bihar and Madhya Pradesh may also have played a role in the export ban. Supply chain disruptions. This is the reason 4. Due to lockdown, led to higher percentage of rotting produce and distressed sale by farmers. Next, we'll see the influence of neighboring countries. As India bans onion export, prices in Nepal go up at least 25% overnight. The existing stock at the market could last for 2 weeks, but traders have started taking advantage of India's export ban. Last year, China onions had replaced India ones in the market, but according to traders, consumers prefer the Indian variety. However, demand from Sri Lanka, exporters say, has suddenly picked up as the island nation also has reported heavy destruction of their crop due to rains. The landed cost of India onions at Dubai airport at this moment is around Rs 32 to 35 per kg, which has led many exporters to increase their shipments from Nashik. During April-June period, onion exports to Bangladesh, India's largest overseas market for the key kitchen ingredient, shot up 147.5%. So what next? The new crop, they say, will arrive only post-November. And with the demand expected to rise before the Dashera festive season starts, prices will continue to remain bullish. The second reason is inflation. Retail inflation in last 5 months have been in excess of 6%. Unless retail inflation in September 2020 declined sharply to around 4.5%, the retail inflation in 3 consecutive quarters will exceed 6%, and Monetary Policy Committee will have to respond to the government on the steps taken to keep inflation in 2 to 6% range. High inflation shrinks the scope of RBI to lower lending rates to boost sagging growth. We have to wait and see if rate cut likely happens in September 29, October 1 meeting. That's all I have for today. Please like, comment, share and subscribe. Feel free to provide feedback. Stay safe, stay healthy and take care.